Hello, I'm Tato Motlante, and welcome to the Sidebar podcast, where we amplify some aspects of the integrated annual report, which we released towards the end of April. And today we're in conversation with the group CFO, Tsholofelo Molefe, also known as Bosso. And today you won't be surprised to hear that we'll be talking about things financial. We'll also touch on a bit of strategy, as well as just generally around the integrated report. So Tsulu, thank you very much and welcome. Maybe let's start on the last point. I mean, we've released the annual reports, as I mentioned, towards the end of April. Can you give us an idea or just some thoughts as to why people should actually read these reports?
So our suite of reports are very important for us at MTN. They do provide, tools to all our stakeholders, very valuable in terms of, understanding how our business, particularly in 2023, how we've executed on our strategy, how we have performed overall, and also the prospects, for the future. So we see them as, tools that provide, what we call value creation journey for our shareholders. So it is important, and I encourage particularly, I'm sure all our shareholders read them, but we encourage all our employees as well to go through them in a lot more detail. I think what's important as well coming out of those reports is the operating context that we talked about when we released the results, that we operated under the macro headwinds as well as the geopolitical uncertainties, and how we have navigated through those as a business, and also taking advantage of the opportunities that we have in the future.
Yeah, that's very important, and I think we'll touch on some of these aspects. And most important is that, as you say, it's not just for our shareholders; it's for a wider range of stakeholders that we serve and that we communicate with. So I mean, generally, the foundation of these reports is something we refer to as material matters. There's double materiality, all sorts of jargon. But, they provide the context to what you've just outlined. I mean, can you just give a little bit more color on material matters, what they mean, etc.?
Yeah. No, thanks, Tato. I mean, material matters are essentially what I would call factors that really affect, obviously the business overall, particularly in terms of, how we have delivered on our strategy, how we have performed, and they can either be negative or positive in terms of how they affect the business, and they generally are linked to, or I should say they should be read in conjunction with the risks that we've identified for the business. There can be an overlap, but there is a clear distinction. And I think they do also provide, what I would call potential for, the ability to be able to, as I say, navigate those challenges that we see in the business. So, when we talk about macroeconomic environment, geopolitical uncertainties, as an example, those are the sort of things that we speak to when we talk about our material matters. Yeah.
Yeah, I mean, and I think it's important to note that the work that goes behind actually getting to those material matters, we look at like 150 odd of these material matters. Yeah. And so on. So I mean, you talked about the macro environment. So that's one of the material matters. I think if you look at it carefully, it's kind of two parts. There's macro, geopolitical, and there's also the regulatory context.
Yeah.
These have intensified quite a lot over the past couple of years. I mean, maybe just give us some of your thoughts about some of these factors and how we're managing them.
Yeah, and I mean, just, to touch on the point you mentioned, it is an important point to mention because there is an independently facilitated survey that goes into determining what our material matters are. And back to your point, over 150 were identified, but we actually prioritize, at least the top 10 that we believe are very crucial for the business. And maybe if I touch on, for instance, some of those factors, as we indicated when we released the results, we operated, in a challenging macroeconomic environment, where we saw rising inflation, FX volatility in various markets we operate in due to the various currencies, but also a high interest rate environment. And I think if I just, unpack that a little bit, we saw that, from a rising inflation perspective, it put pressure on, our ability, the ability of our customers to continue to take our service offerings. obviously putting pressure on our top line growth, but also just, having an impact on the cost of doing business as well due to high inflation. As a result, having an impact on margins, profitability, as well as cash flow generation. And of course, when you also look at the FX impact, various of the markets that we operate in, obviously use different currencies. We saw, sharp devaluations, in particular in Nigeria. And maybe just a key call out, we saw the significant impact of the Naira in Nigeria having an impact on particularly tower leases, as well as the borrowings. So that has had an impact on our earnings growth overall. But also the interest rate environment also, putting pressure on the cost of capital from the business perspective. So those, overall are some of the things. And I think it's been pleasing to see how the business has been very resilient. If you just take away those macroeconomic environments, for instance, you'll notice that the, underlying performance was very resilient, demonstrating the ability of our businesses to really be able to focus on, commercial and operational momentum in a tough economic environment. Yeah.
So I'm worried that you focused a lot on the negatives and the focus, but I think, as you've mentioned, the business has done quite a lot to manage this.
Yeah.
There's a lot of initiatives that are ongoing. I mean, can you just touch on some of the top line drivers, some of the things we're doing around with expenses, the balance sheet, and so on?
No, thanks. It's always good to, give both sides of the story. And certainly we are proud, as I say, to have seen how the business has showed up in this tough environment. I think firstly, we've continued to, focus on pricing optimization. In some markets, we have been able to do, headline tariff, applying for tariffs and obviously growing the, the revenue of our business. We focus on, expense efficiency as well. I think it's pleasing to see how the business has been relentless over the years. I mean, before 2023, we achieved over 6 billion rand over a 3-year period of expense efficiency program, and we've communicated to investors that we have targeted a 7 to 8 billion rand over the next 3 years, starting from 2024, and we're seeing some good progress in that space. Focus on the resilience of our balance sheet. We've been able to, particularly at a holding company level, deleverage the debt that we have, and something that investors have really been, telling us that they are pleased to see us doing. To date, we've been able to reduce our hard currency debt, dollar-denominated debt, close to about $1.2 billion over the past couple of years have been paid down. And we're seeing that we are now at 23% in terms of non-rent mix, and we'll continue to progress with the balance of the debt that is exposed to a hard currency. So very good programs that we're seeing across in terms of how we can navigate those challenges.
Yeah, I mean, I think quite important just to give that context. So you're saying we are at about 23% hard currency. It used to be 60%.
Over 60%, yeah.
And the objective was to actually just flip that around. We've actually gone beyond the 40% to the 20%. So very good progress.
Yeah.
Now, obviously, one of the things that underpins that progress is the capital allocation framework. That has stood MTN in good stead over a number of years. There are questions that arise. Is it still relevant? Is it still appropriate for the business? Any thoughts on this?
Yeah, no, absolutely. I mean, if you look at, and we always say that we've been disciplined in how we've allocated capital. We have a very clear capital allocation framework, and we have a pecking order to it. Given that, our business is still growing, as we say, we see structurally high demand for our services, both data and fintech services. It was important for us to continue to invest in faster growing areas. So we focus, first as a priority investment in our networks and platforms, networks, core connectivity, IT, but as well as, our platform businesses. But the second, priority would be faster deleveraging of the holding company debt. As I've indicated, we've done very well to date, and we continue with those efforts. Returning cash to shareholders is a key component of that capital allocation framework, and we do return cash to shareholders. We look at opportunities for inorganic growth where it's possible. So M&A as a capital allocation priority is number 4 on the list, but it has to be value accretive, informed by a very strict financial as well as risk assessment criteria. And then last but not least, which is what most of our shareholders have been focusing on, is if we have excess cash, can we look at share buybacks or a special dividend?
Yeah. So there's a couple of things I want to pick on there. I mean, I think it's you can't emphasize enough just the de-risking of the balance sheet, particularly that hard currency.
Yeah.
And actually, you've seen the impact on our business over the past couple of years. But you've touched on some strategic elements of what we're trying to achieve. Can you give us, your perspectives on the strategy, the progress thus far, your thinking around the investment case?
Yeah. No, I think if you think about the fact that, we come from an era of being a core connectivity, player. I think in line with global trends, as there's a saying that says you either adapt or you collapse. So we've had to evolve ourselves.
I think you've been polite. It's adapt or die.
Or die. But I think we obviously had to evolve ourselves as a core connectivity business. Evolving from a pure mobile play or core connectivity to also introducing the platform businesses such as fintech and digital services. I mean, voice and data are still very, very core to our business, and you see as you go into other markets, there's still room for growth on voice. We're accelerating data services, but at the same time accelerating the fintech businesses. We are seeing obviously the performance of that business starting to pick up, but also looking at within that business the advanced services. So very pleasing to see how we are moving from that perspective. We are structurally separating that fintech business, and the whole objective as well is to try and crystallize value with the partnerships that we're looking at. We concluded the commercial agreements as well as the equity partnership agreement with MasterCard as we conclude the structural separation. And I'm very, as the CFO, waiting with abated breath to make sure that we conclude the separation so that we can crystallize some value from that perspective. Looking at our fiber business, we will be looking at the separation of our fiber business into the future as well. So still some work going on there. I think we've done well in terms of de-risking ourselves from a portfolio perspective. So portfolio optimization, we've now concluded the sale of our Afghanistan business, thus concluding, the exit of all our consolidated subsidiaries, which is very, very important as well for us as part of our strategic, focus area from an Ambition 2025 perspective. Yeah.
No, so that sounds good. So it's an exciting outlook. I'm hearing growth, faster growth. I'm hearing de-risking, and I'm hearing realizing value. But obviously, you need to marry the two of this exciting outlook, the difficult macro that we're facing.
Yeah.
Can you give us a sense of what are the priorities that help us through this transition as we're managing the current environment? Yeah,
no, absolutely. And, as we say, we must run and transform at the same time. So accelerating, our businesses the performance of our businesses is important. I think as we've seen over the past few years, our major businesses, in particular SA, Nigeria, have been, particularly facing some headwinds, load shedding impacts in South Africa. The focus is to make sure that we recover from a top-line growth perspective through pricing optimization, as well as, headline tariffs. So the team is hard at work with that. I think they've done well in terms of reducing cost, but also being a lot more efficient from a capital productivity perspective is very important so that we can, improve the the return on invested capital, and therefore, a strong cash generation. So that's the focus from a South Africa perspective. I think when you look at Nigeria specifically, you will have seen that underlying performance has been good. What we need now is to focus on tariffs, and there are conversations happening, with the regulator. We need to, focus on the improving the earnings profile of the business, following the sharp devaluation of the naira, which impacted, the profitability of the business as well as the shareholder funds. So that's really the key for us, and also, continued cost optimization in Nigeria, very important, and de-risking the business from, hard currency or dollar obligations, so to speak. So from an outlook perspective, that's important. Continued efforts on the expense efficiency program across the board, as I indicated earlier, it's very, very important. Focusing on accelerating our fiber and fintech businesses, including other platform businesses such as digital and Ayoba, which is our super messaging, instant messaging app platforms. And of course, looking for strategic partnerships in areas where we obviously need to grow fast. So those are essentially from an outlook perspective. And I can't emphasize, as you say, enough around how we strengthen our balance sheet, not only at HoldCo level, but the balance sheet of our various businesses, including SA, Nigeria, as well as Ghana and the like. Yeah.
Now, I think that the key thing in what you're saying is that there's a very clear link in this transition period to the overall strategy, and I think that that's good for continuity.
Yeah.
So I think, look, as we wrap up, maybe from a more personal level, when you reflect upon our discussion, what are the key learnings, the valuable lessons that you take away from, I suppose, a lot of what we've experienced as a business, how we've executed around managing it?
Yeah, thanks for this question. And I think, on reflection, we appreciate that. I think 2023 was particularly a very tough, year for MTN. Not that the other years have not been tough, but particularly tougher probably in 2023 with macro headwinds, what we experienced in Nigeria. And I think what's been pleasing is that from our perspective, just the continued operational momentum, commercial execution from the business, keeping calm among the storm has really helped us to really be focused on strategy execution, operational execution. And I think it just demonstrates the resilience of the business, under this macro environment, as well as, the geopolitical uncertainties that we operate under. And I'm really pleased to see that, across the board, as MTN, as we work as a team, we focused on, what is we need to do to be able to deliver on our strategy. And, for me, that's, personally very, very pleasing. Yeah.
Yeah. Now, if I add my 2 cents, I think what you say is very important. I mean, a lot of people sort of get lost in the negativity, in the difficulties, but these things do come in cycles.
Yeah.
We do get the feedback from our shareholders that say, manage as best you can what's within your control. And get through what's outside of your control.
Yeah.
No, Tsholofelo, thanks very much for your thoughts and your insights.
Thank you.
And again, just a reminder to our stakeholders that all of this information in a lot more detail is available on the investor relations portion of our website, as well as the dedicated website for the integrated report. So thanks again, Tsholofelo.
Thank you.
And thanks to our stakeholders for tuning in.